Hi, this is Bob Iacchino from Path Trading Partners, along with my co-founder Mike Arnold. This is an afternoon Path Chat for April 10th, covering the futures markets. Mike's going to cover the usual batch of futures from transports all the way to silver. Same thing that we've been covering in the usual Path Chats. Today in the markets, really, we ended the day flat with the S&P being up 11 at one point and then down 4 at another point. Geopolitical tensions still kind of in the forefront. The market seemed to shrug them off this morning, but then news of 150,000 Chinese troops being amassed at the North Korean border started to sink in. Talk of Donald Trump and his administration rewriting the entire tax plan, so they're not necessarily going to be pushing the tax plan that they ran on. That shook the market a little bit. But with all of these things kind of being stirred in, we didn't have any substantial U.S. economic data. We did have Canadian housing starts, which actually reached a 10-month high. So that was a big bump up. And the new yuan loans overnight was actually about 30 million yuan higher than the expectation. So some good data there. U.S. labor market conditions index change was down, but in light of the lower unemployment number that we saw on Friday, you would expect that. So that is about it, other than Janet Yellen's speech in the University of Michigan, which is still ongoing as I record this. Actually, the speech was pretty innocuous, but she had a Q&A session, and a couple of comments came out of there. She said that the unemployment rate was actually below where her and her colleagues would consider full employment. Now, that doesn't mean that they overshot their target, because it has a lot to do with labor participation and the U6 number, which is the total people that are not employed, as opposed to unemployment. So she's not terribly concerned with that. But also, she said, I think we have a healthy economy right now. And whereas before we had our foot pressed down on the gas pedal, trying to give the economy all the oomph we could, now allowing the economy to kind of coast and remain on an even keel, to give it some gas, but not so much that we are pressing down hard on the accelerator. That's a better stance of monetary policy, she said. We want to be ahead of the curve and not behind it. She also said, we think a gradual path of increases in short-term interest rates can get us to where we need to be, but we don't want to wait too long to have that happen. So she was, even in the Q&A, she was doing both sides of the FOMC fence, so to speak. Let me turn it over to Mike to let you know what he's seeing on the charts, which is all we're going to trade anyway.
All right, thank you very much, Bob. Transports today eked out a slightly higher high than last week, but then pulled back. If we rally up, this 92.20 area is turning into pretty key resistance. That's one to watch. If that gets broken, we're then going to target 92.70 and the 93.23 area, where we have again projection and retracement cluster. To the downside, if it pulls back, watch for the 91.20 level as support. Once that's broken, we're watching for a pullback to 90.60, and then if that level's broken, significant level right around 90.27. Over to the industrial average. Again, we're stuck in this range here. So we're watching for really a break below the 2609 level or a move above the 2750 level. On a move above 2750, minor resistance at 20,800, followed by 20,850 area, and then the 20,887. If we break through all that, we're looking for a long-term potential rally to 20,970. If we pull back, support 20,600 to 20,609. If that's broken, then we're watching a 20,540, followed by 20,514, and then on a really big pullback, 20,431. Over to the S&P. S&P really needs to get above the 2365 level or below this 2337 area before it's going to make its next defined move. On a rally up tomorrow, you are going to have some resistance around 2350 to 2352. Then looking at about 23.71, followed by a retest of potential highs of 23.74. Once those are broken to the upside, next targets of 23.81 and 23.89 are key. On a pullback, we have some support at 23.45, followed by a significant level and a flattening out 50-period exponential moving average that comes in right about 23.36. And then that is broken. We don't have anything really until about the 23.20 level to the downside. NASDAQ. Again, were low volatility the last few days. Market's really trying to make up its mind. If the NASDAQ drops below the 5,400 level, watch for a first test 23.85, which is a key defining point on a new trend line. If that's broken, we actually have a trend line trade with a first target of 53.57 and a second target of 53.36, which would complete the trend line trade. And then if it were to fall lower, the next major area is about the 53.18 level. On a rally up, you're going to have pretty strong resistance around 54.47 to 54.50, and then above that, the only level higher at this point is a retest of the highs right around 54.80. Shift over to crude. Crude, another strong rally today, up to the highs of 53.14. If we exceed today's highs, we're looking at 53.28, pretty major significance level up there. And then once that's broken, a 53.80 area. And if we go through that, we're looking for another major resistance right around 54.21. On a pullback, very minor support right around 52.93, followed by 52.52. Then we have a trend line coming into play for support. Once that is broken, we were looking to potentially fall back to 51.66. Then we have a rising 8 EMA starting our rotation zone at 51.39. Let's pop over to some metals really quick also. Copper sold off. We talked over on our weekend path chat about how it has to get out of this defined range. We did close below the trend line. The next level down would be 259.46. This is support, then very key support around 259.06. Then if that's broken, we're looking to 257.87. If we happen to drop below that, we still have a old defining point on the trend line at 256.83, and then these prior lows right around 255.85. On a rally back up, look for some minor resistance around 263.51, followed by 265.50, and then we're looking at possibly rallying back up to 267.65. Over to gold. Gold came down, fell into the rotation zone today, and then rallied back to almost unchanged on the day. If we head lower, watch for support around 1248 to 1247, which is going to be a lot of support in there. And then if that's broken, we can go down to about 1243.80. And then if that level's broken, we don't have anything until 1233. On a rally back up, resistance 1255, then followed by 1261.50. And then you can look for a possible rally to 1265.60. And once that level is broken, a possible retest of the highs made last Friday at 1273.30. Finally, to wrap it up, silver came down. We talked about the 50. It found support at the 50 and then rallied back like gold to nearly unchanged on the day. If it heads lower, we're going to have key support right around 1780, followed by today's lows around 1773, and then we're looking down to 1763, and once that's broken, nothing really about till 1746. On a rally, overhead resistance between 1809 and 1810, then a possible move back up to 1818, followed by 1828. That's all we have for you. Back to you, Bob.
Thank you, Michael, and thanks to everybody else for watching, and we will talk to you guys in the next Path Chat. Cheers, everybody.